Hi everyone, it is April 14, 2023. Today is actually the bank earnings that will be reported pre-markets in the US. Nonetheless, we're actually going to discuss some contrarian set of long ideas in 2023. We will be discussing companies that are actually trading at about 30 to 50% lower from their 200-day moving averages. Let's discuss a few of them. Some of them are actually in uptrends, some are actually still in a reversal mode. Let me discuss each one of them. Okay, wait up. Wait. Share screen. So we are primarily macroeconomic bearish, but we actually acknowledge that there are companies or there are sectors that we believe that long ideas can actually rotate upon. Let's talk about a few things. One of the key themes that we really believe upon is to remain secular bullish in terms of commodities. When it comes to commodities, we're talking about gold, silver, copper, lithium, energy. I'll also discuss the charts as well as their fundamentals, as well as the theme of actually investing in a basket of value stocks. So in that light, we think Alibaba at current levels, Nintendo at current levels, and Charles Schwab are actually very attractive in that value investing basket. So a lot of people might have been aware already in the Super Mario Brothers movie box office. All the records are smashed on opening weekend. There's actually a lot more catalyst on Super Mario Nintendo rather than just simply the movie. We see there is actually more upside in the video games, which are actually already generating 50% gross margins. For those who are in the know, yes, there's going to be a lot of new lineups, new launches. The most important, I would say, would be Legends of Zelda, Tears of Kingdom coming out this May 12 launch. Also, we also have really assessed and agreed upon with a lot of the some of the fin twitters or some of the hedge funds out there that Schwab or Charles Schwab is still actually a very compelling buy as a risk reward opportunity. Charles Schwab gets to meet our value investing basket. Charles Schwab's retail deposit base is very sticky. Over 80% of their customers' cash is FDIC insured. The cash is spread across approximately 34 million brokerage accounts with an average about $10,000 in bank cash per account. Schwab has more balance sheet liquidity than deposits. In both cases, there is a low risk of correlation among their respective client bases. And although there will be some profit headwinds stemming from the banking crisis, we view the large declines in these shares as overly punitive and thus believe the risk reward for each is increasingly attractive. Charles Schwab has actually fallen more than 40%, actually trading at about $50 today versus your S&P 500 and versus your financial sector. And even in a worst case scenario, the firm will still keep operating. They can cover 100% of their bank of their if ever there is a bank run without having to sell a single security. The rate and balance sheet woes have overshadowed the 4% gain in the firm's asset management and admin fee, estimated to be $1 billion, and its trading revenue is about $930 million. Take a look at the balance sheet. This is basically what people are very afraid of due to that huge held to maturity bond portfolio and high rates affecting that. We do believe that this is not a going concern for the Charles Schwab. And so actually for Charles Schwab, we have been discussing buy ratings on it. I also actually tweeted out the gross margin of Charles Schwab here. Here. So if you take a look at the banks and the brokerage firms out there, Schwab is actually very high up there with a gross margin of about 90%. And although it's 30% below its 200-day moving average, we do believe it's a contrarian buy at 50. At 50, you're roughly paying about 10 to 15 times PE multiple. And that's roughly about 15. You heard me right. It's about 15 15 to 10 times PE multiple, depending, of course, on the earnings that will get released this quarter. So the release of the earnings is coming out actually this Monday. It's actually trading today at 51.5. I did enter here about 51.5, 51.7. Market cap today is about 90 billion. You could see that it's trading about 15 times multiple here and could potentially be either 15 or 20 times depending on how low the earnings are this quarter. No, but I do think that this one is an opportunity to take a look at. And even if you look at the last few quarters, let's say it goes down towards 40, I do think that that is an achievable area to buy Schwab. I don't think that the moat or the brand, which has been built over the last couple of years, is actually going to be deteriorating anytime soon. Plus, of course, you can see that dividend and that cash per shares is actually a very, very strong company. Cash per share is about $23 for this company. So any dips near $40 is an opportunity, in my view, also to buy more Schwab. So I'll be actually buying $50 until 35 just in case Charles Schwab actually falls down. Let me give you a watch list as well of some long ideas. Last night was pretty much a buy signal over the biotech or the cancer plays. So in general, you don't normally see so many of these stocks in the sector going up. For instance, in a single day, predictive oncology, POY, actually rose 78% with a volume of 13 million shares. NanQuest, which is Immunity Bio, is actually up 28% with 10 million shares. Editas Medicine, CRISPR Therapeutics, Intellia Therapeutics, all of them are gene editing stocks, rising 13%, 16%, 20%, all with significant volumes, 1 million, 4 million, 5 million. Precision Biosciences up 10% with nearing a million shares. Invitae Corporation, Envita, is actually up 10% with 9 million shares. Beam Therapeutics with about 1 million shares is being bought at $32. Iovance Biotherapeutics, also 3 million shares, 5.82. Bionanogenomics, 5 million shares, $1.16 being bought up. PacBio, 5 million shares, $11.50. And then you got the usual Teladoc. Teladoc is up 3%. Then you've got GoodRx, 4%. Novavax and Moderna are up slightly, 3%. BioNTech, Vor, Biopharma. But really, the biggest winners, as you can see from here, from PacBio all the way up, are mostly cancer detection plays or those that are expected to actually cure cancer. So what's actually happening? Let's take a look on some news here. In March 6th, there's actually a lot of people that are discussing whether CRISPR technology is something to buy in 2023. You can see that CRISPR is co-founded by the Nobel Prize winners Emmanuel Charpentier and holds licenses to the main CRISPR patents. Beam Therapeutics uses a variation of CRISPR-Cas, promising to be more accurate. We've already seen a lot of tests and patients actually getting cured with gene editing for cancer, even if it's a niche, it's still in a niche market. Vertex Pharma actually has been running clinical trials for what would be the first FDA CRISPR-Cas drug in play with CRISPR Therapeutics. So you could see that as of last night, CRISPR is $50, Beam is about $32. Vertex Pharma, which is actually a profitable company, is actually trading near all-time highs at $333. This is Vertex Pharma, which is a drug manufacturer. So this one is partnering with CRISPR-Cas9. And you can see a following things in terms of news updates. Verve and Intellia has rallied after Canaccord Genuity initiated a coverage with a buy recommendation, citing the upcoming catalyst and an underlying gene editing technology. Meanwhile, another brokerage firm, Cantor Fitzgerald, launched a coverage on CRISPR with an overweight recommendation, hinting at a potential FDA approval for exa-cel. This is the sickle cell disease candidate that the company is developing with Vertex Pharma. If that actually happens, then CRISPR can potentially just go 100%. That's why there's that flurry of buyers. Additionally, Editas Medicine just announced the appointment of Emma Reeve, which is the former CFO of Constellation Pharma, as chair of the board in place of outgoing executive chair James Mullen. So we've got actually a lot of positive catalysts from upgrades and a potential drug happening soon within the next few months. Let's take a look as well. For CRISPR, they are actually holding cash today worth $1.85 billion, and the market cap of CRISPR is roughly in the realm of about 3 billion, which means that those people buying today are really assured that it can actually be 50, they're paying about 50% cash. So the downside may be 50%, whereas the upside could be well in the 10x region. I'm not saying that it will happen, but a lot of people are basically assuming, given that CRISPR-Cas9 is a technology that can potentially be in the realm of hundreds of billions of dollars. So let's take a look at the trials. It says here that so far with their cash, they have a burn rate of about 3 years of runway, which gives them enough time to actually finish the phases. CRISPR CTX001's clinical trials are currently in phase 2 and 3, slated to end in 2 or 3 years. You may be able to look for results starting in late 2024. Ultimately, yes, these are high-risk, high-reward plays. FDA approval or new collaborations could bring in new revenue. We know that CRISPR is actually working with Vertex, but they would need to show consistent revenue to attract long-term investors. This is an example of that sickle cell disease discussed in 2022. Vertex Pharma and CRISPR Therapeutics, let's take a look at this. It says here, since September 27, 2022's disclosure, Vertex and CRISPR have announced Vertex has concluded discussions with the US FDA, granting the exa-cel a rolling review for the potential treatment of sickle cell disease and transfusion-dependent beta thalassemia. They will submit their biologics licensing application for the exa-cel beginning in November, with a completion by the end of Q1 2023. That's why you're actually seeing a ton of people. Oh, I was sharing. Yeah, stop screen. We're able to see what I was sharing since a while ago. You see this? Yeah, you can see my slides. Let's see. All right. Yeah. Yeah, so you can see that Vertex and CRISPR are actually looking for the reason why there's a lot of upgrades in the genetic editing stocks is because there are a lot of clinical trials that are getting finished and are being completed in submission. Let's take a look as well on another gene editing stock, Beam. Beam Therapeutics. It has revenue but no consistency. In 2022, Beam actually entered in a collaboration with Pfizer, netting the company $300 million. Beam and Pfizer will be using the technology to target rare diseases, but aside from that, Beam's annual report also just shows $60 million in revenue and a total net loss of $289. Currently, though, Beam has $1 billion in cash and marketable securities, and with their current burn rate, that means that they can still have a runway of at least 4 years. Now, their burn rate could be a problem today. Beam might be a bit behind compared to CRISPR. It has only one active clinical trial. It will then need phase 3 clinical trials before it can get FDA approval. Like CRISPR, Beam is targeting sickle cell anemia, but if CRISPR's drug comes out first, one wonders if Beam's drug will find a market. Actually, people are looking at Beam for drug therapeutics, but Beam is also doing a lot of gene editing in terms of already treating cancer patients. So there's actually a lot more in store rather than just a drug distribution or collaboration with Pfizer. Let's take a look further on Intellia. Intellia actually was a company that had a lot of good news in terms of the treatment. Intellia 2001 reduced a disease-causing protein more than 90% in 12 people with transthyretin-mediated amyloidosis cardiomyopathy, or ATTR-CM. This is a genetic disease that can lead to heart failure. With an industry leader in gene editing products, this company's lead program for treating major heart complications is already in mid-phase trials and showing promising results. So far, Intel is also a company with over $740 million in cash and has been partnered with Avancell and Kyverna to advance their endeavors. You'll see that they're actually in the phase 2 trial. Let's take a look at their charts as well. Editas Medicine has gone from $100 to a new low of about $6, ultimately rallying 20% last night towards 765. I think this one is worth watching because if you're right, it can rally all the way towards $20 at the very least. And if you are lucky, then maybe it's a 10x move all the way to $70 somewhere in the next 5 years. So it's something to watch out. A lot of people are discussing buy ratings on these due to the fact that it does look as if you are in the ground floor. Take a look at this level. You're down 93. You're buying a company down 93%. And basically getting into the genetic editing stocks at a very, very low rate with a lot of cushion in cash. Wait up. Yeah, so you can see na no the slides. Thank you. Kanina hindi ko na share. Hopefully ngayon nakikita na yung slides. Screen layout. Ito yung slides. Okay, sige. So Editas, for those who aren't in the know, Editas is actually treating blindness using genetic editing. So this one is actually part of the genomics that you might want to be watching as we are seeing actually some buy signals already popping in. CRISPR Therapeutics, of course, from the namesake of the CRISPR technology, you can actually see that this company has gone down 80% and is slated to be the very first collaboration with the drug company Vertex. So this one is actually not down 90+%. This might be the stronger candidate. I did buy at $50, even if it was up already 15%. Yesterday's low was about 44. This one looks to be on a buy list with a move. In the short term, it could move $60 to $80. Something to watch out. I think the risk reward for CRISPR is actually on the upside rather than on the downside. So watch out for this. Beam Therapeutics, take note as this as well. Beam Therapeutics has gone down from $140 to $30, so it's down 80% as well. And what you'll notice is that the $30 have actually ended up as support. So the industry is getting a lot of good news, a lot of buy ratings, plus a lot of catalysts in terms of the potential Pfizer drug with Beam. Okay. Precision Biosciences, just to take a look at the rest, even if this one did not have any buy rating or any catalyst, we are so far seeing that there's just an industry effort to actually move up on almost all the cancer detection plays. So this one, Precision Biosciences, actually went up 10% as well last night. Ginkgo Bioworks, which is DNA, ticker symbol DNA. This was actually being used during the COVID vaccines. But you can see that they actually are a biotech company down 90%. Last night it was also up 3%. This is not a direct play on gene editing stocks, but I think that this one, due to being a biotech play in nature, should be on the watch list for those who are looking at biotech plays as well. ARC Genomic Revolution ETF, also take a look at this, even if you're not interested with ETFs, as I believe that ARC-G actually has significant positions on Intellia, CRISPR, Editas, and also Teladoc. So you can actually see that last time at about $28, it also managed to move at about $42. That was last year around June all the way till August. So maybe we might see a repeat somewhere here from about 27 back towards 36 or 40. So let's take a look at ARC Genomics as well in terms of a buy list. NVT is very promising. We're seeing this stock drop to 98% already. And you're seeing a lot of buying action about 1.3 to about 1.40 plus. NVT, as we saw, actually had very good news. They just showed they published research saying that they can now predict and detect cancer recurrence earlier. So this, let me just read this to you. Invitae, which is a leading medical genetics company, announced a new research published in Nature describing the first use of the company's personalized cancer monitoring platform, demonstrating the utility of ctDNA as a biomarker for cancer recurrence in a large cohort of patients with stage 1 to 3 non-small cell lung cancer followed for up to 5 years. This research technology used in the study leverages a patient-specific panel developed to identify variants from a patient's own tumor rather than a static gene panel. This study will leverage Invitae's PCM platform, assessing panels of up to 200 variants at the time this study was conducted. I do think that actually Invitae is actually one of the cheapest names that you can get. This is 98% down from its peak. Even if you just make a buy at 140 and it goes $10, you can easily make a really, really good killing. So I think from a risk reward standpoint, put NVT also in your buy list. Teladoc, just for those who aren't in the know, Teladoc, which is the largest ARCG position, a telemedicine company, is also a company wherein you can get diagnosis for cancer. How you can get it right? Let me just read to you from their Teladoc website. It says here that the best doctors, expert medical opinion service will review your cancer diagnosis and treatment plan to confirm that it is correct or to recommend a change. With 50,000 of the world's top physicians in 450 specialties and subspecialties, including oncology, their suggestion may help you avoid unnecessary treatment, surgery, side effects, or costs. So if you're diagnosed with cancer, contact us to request a case review. We will collect all of your medical records, every possible cancer treatment, every option for your condition. So I think that this one is actually something that will actually benefit Teladoc. You'll see that also in recognizing Breast Cancer Awareness Month, they've already been helping many members with cancer cases, those that are developing invasive breast cancer. So for instance, one example is a diagnosis with an early stage 1A breast cancer. So the physicians recommended both radiation and chemotherapy as well as hormone therapy. And with access to her to best doctors, she asked for an expert medical review. They decided not to go through with the chemo because of the side effects, gave her the peace of mind to find her ideal treatment path. So I think like you might be actually looking at potential increases in potential revenue for Teladoc with more technology right now on early cancer detection. Now, for those who are also looking at LabU, which is basically a biotech triple leverage long play, this is the S&P Biotech Bull 3x shares. We are seeing actually a lot of bottom fishing here at $4. This used to go 3x towards 12. We might see actually that entry area here at $4 to $5, which can actually also go to 10 to 12. So put this in your buy list. The ticker symbol is LABU, LABU. Now, I just wanted to give also some long ideas, possibly. So in Chinese market, we do like actually to look at JD. Take note that on October 25, 2022, right around the time on Hu Jintao being booted out in the CCP Congress, JD actually traded as low as 147, rallied back towards 260, and so far today is going back to retest that $147 region. We look at it as actually an opportunity to enter, even if it can actually hit new lows. We think that actually the mitigated downside given China's reopening and a strong recovery in technology stocks in China, in particular with Alibaba's restructuring. So I think actually JD will actually benefit, same as for Tencent over time. So we are actually on the buying prowl for JD over the next coming days or weeks. Walt Disney will be reporting next couple of months though, but just watching how it's actually trading within the $90 to $100 region. Looks like there's quite a lot of support at 90 before the earnings comes out. Not really bullish on Disney actually breaking out too soon. It could actually be capped out here at 116 or 130s. Nonetheless, it looks like there's very little downside for Mickey Mouse here, given there is a very strong push by Bob Iger to also be more efficient, and they've been laying off a ton of employees, especially in the streaming device division. So I think that Disney Plus is going to be less losses over time, and that may actually help the stock actually recover at least back towards 116. So you might actually want to check out the 90 to 100 region for Walt Disney. Another thing to actually look at is the near-term advertising slowdown. We understand that a lot of the streaming devices have been actually affected, but if you think about the fact that the traditional linear media is actually down and everyone's going into the streaming, whether they'll be going to HBO Max, Netflix, or Disney Plus, we do think that one small company that is very strong in their niche is Fubo TV. So Fubo TV actually rebranded this March 2023, launching an ad campaign co-produced by Ryan Reynolds, featuring Kevin Garnett and Mark Sanchez. So actually, I do believe that this was a very good partnership, and this one is a product that captures their market niche, which is mostly sports enthusiasts. You are seeing actually Fubo trade about 98% down from $60 to about a dollar 10 cents, a dollar 20 cents. This might be actually something to watch in your buy list. So actually, this one I'm looking at Fubo and Envita. I do believe there's a huge short interest, and there could be a short squeeze play as well here. So you may actually make a move either. It can I'm not sure if it can go 500 to 1,000%, but it has that tendency to move, let's say, from one going to about six, seven, eight. So we watch for these types of names. I'm also bullish, as I said, on a lot of commodities. Today, actually, we noticed that lithium miners, the largest of the world, Ganfeng Lithium 1772, is actually getting that buy signal here at about 50 to 52. So I'm looking to actually buy more of that, as I see that a lot of the electric vehicle companies, such as Tesla, such as BYD, would definitely need to store a lot of batteries. And they would have to store a lot of lithium and buy a lot of lithium over time. The last time that it actually traded at $50, it actually went as high as 75. So I do think that there might be a return back towards 70 to 75. So here about 50 to 52, or even at 48, 45, I'm looking to buy into Ganfeng Lithium. This one is just interesting because Lilium is actually down 96%. Lilium is actually an electric vehicle takeoff landing. I'm not saying that it will already bottom out at 50 cents. It might actually go down towards 35 cents or 40 cents. But so far, I'm actually seeing that Lilium, from their recent accomplishments that they shared in their recent March 2023 letter, so far they have said that they were able to successfully execute a delivery, first pre-delivery payments from Evolair and additional new customers, including iFly, bringing the total order pipeline for 640 Lilium jets. What's important is that I also took a look at Lilium. They're actually having cash that is worth more than their share price per share. Their cash is about 64 cents per share, although I understand that they do have cash burn, which might be some of the reasons why people are a little bit afraid. The year-end 2022 liquidity is about 206 million euros, and they do have a lot of constructive discussions to follow up funding in progress. Lilium is actually invested upon by Tencent, which is actually, I think, gonna re-up or re-increase their funding for Lilium. I think like companies like Tesla or Boeing or even like the bigger airplanes or even the small ones, the small cars like Xpeng, Neo, Li Auto, they might actually be interested in the top engineering of Lilium's talent. So I'm looking here more on the IP, on the intellectual property. And I think that Lilium is actually quite undervalued. That's why I have it in my Contrarian buy ideas. I haven't bought this yet, but it's actually in my watch list. I do see that the reason why I'm buying it has more to do with the IP, the intellectual property, rather than whether they have earnings, because we can clearly see they are losing money every quarter. Okay, another thing that I want to share is Heliogen. Heliogen actually dropped 99% towards the 30 cents. And actually, there was news today that the company is going to be bought out for 40 cents per share. So we are excited to announce our offer to acquire Heliogen, Continuum Renewables. We are seeing that Heliogen has a strong reputation for developing innovative renewable energy solutions, and our proposal would offer the company's shareholders a substantial premium to the current share price. All in all, the proposed all-cash price of 40 cents would represent a 60% premium, because when it was shared, it was trading at 25 cents. I think that there will be limited downside for Heliogen in case you may be able to get it at 30 cents or below. I think that you can make and pocket an arbitrage with this type of proposal to purchase all the shares of Heliogen. Of course, this will be subject to closing conditions, including regulatory approval. I think this purchase price is actually very cheap. That's why maybe the shareholders will not agree to this proposal to buy it out at the 40 cents. But either way, if you're buying it at 25 to 30 cents, you still make some money. So I think this one is an arbitrage play that we can make for Heliogen. Another thing that I would like to share would be commodities. So we actually have been very bullish on energy names, in particular because of the huge positive free cash flows that they generate with very little debt. One example would be Norway's Equinor. Equinor, we already saw this go from 26 to 39 and even as high as 40, and then gone back down to 26. We think that this area of 26 to 29 is actually an entry point, and we actually believe this one goes back to $40 sometime within the next 6 to 12 months. as oil prices are actually stable at about $70. It's actually trading at 83, but even if oil goes down to 75 or 70, I think that Equinor is bound to make a lot of money with dividends to boot. Equinor is actually paying about 10% dividend yields if you're able to buy this at $29. So I think even an entry at 29.50 is actually also attractive. British Petroleum actually is the top six in the world. So we're actually bullish on British Petroleum, ConocoPhillips, Total, Shell, ExxonMobil, Chevron. But in general, as you can see, as Europe is recovering, yes, their largest oil play is actually British Petroleum, which still is actually in the cheapest in terms of the top six, cheapest in terms of cash flows, and versus say ExxonMobil, versus let's say Chevron. Although I do think that they are all cheap in a sense. So this one I think will still continue to be bullish upon as people continue to buy more oil related stocks that are trading in Europe, and this is also trading in New York Stock Exchange. So BP. Something to also watch is Marathon Petroleum Corporation. What's funny is that even when these stocks are trading at all-time highs, whether it be Marathon Petroleum, ExxonMobil, or Chevron, is that all of them actually are trading with less than 10 times free cash flows, sometimes even just trading at about 5 times versus their free cash flows. So I actually still believe that there will continue to be rotation towards energy names. And even if there was a strong secular bull market already in energy, I think it's still going to continue. We actually said this continuation of the commodity super cycle. We're actually bullish since January. We're saying that for the year, we're bullish on NEM, Newmont Corp, gold, Freeport McMoran, which is also copper. We're bullish on Barrick Gold, Franco Nevada, gold miners, the largest ones, GDX. You've got a lot of commodity players like Rio Tinto, BHP, Vale, and Teck. Yeah, so in general, actually, we're still on the bullish camp on energy, and I would like to also explain that Vermilion Energy actually is actually in the buy list now. After going down from 28 to about $12, we think that it's actually in the buy list again. It's a buy signal here, Vermilion Energy, as actually earnings of Vermilion continue to be ramping up with some with some dividends to boot. So VET actually here about $13 is an interesting entry as well. Matador Resources also, you can see from $72 this dropped to about 44. Even the small companies in the energy space are giving a lot of buying area. So 44 to 52, all of these are actually buy areas. Another SPAC that I wanted to share, just to put in the watch list, is actually Ouster. Ouster is actually a company that's now trading at about 40-50 cents. Key strengths of the combined company. Take note that Ouster and Velodyne Lidar have merged. And you can see that they're serving Ouster OS, DF series sensors, Ouster Gemini Blue City software. They're now with an IP with 173 granted and 504 pending patents. And they have a strong financial position with a cash balance of $300 million as of last December 31. What's interesting is that just like Heliogen or just like the companies like Envite, these stocks have dropped 98%, being priced as if they will be bankrupt, but I doubt that they'll be bankrupt anytime soon. So at 46 cents, I actually think that your play here is they're not going to go bankrupt, and they're actually going to do a reverse stock split such that you can actually make maybe, I'm not sure if you can make like 10x, but you can probably make a double in these types of names. Yeah. And so another company with zero debt and a lot of IP, I just remembered to actually share it as well, is Copen. Copen Corporation here is actually trading with $1. And we've been seeing that actually $1.99 always proved to be support, except in 2020 here during the COVID time, which actually reflected a rally ASAP, and then it's still there. So far, Copen Corporation is actually with a lot of IP, working with Samsung, working with a lot of companies that are into the metaverse, so AR, augmented reality, mixed reality headsets. So we know that if it blooms with what's happening with Oculus and Apple, whether it happens or not, we do believe that the IP on Copen Corporation is substantially a lot. And with it trading with $100 million market cap, this is a small cap or micro cap to watch, which can actually just rally based on IP alone. Okay, so there's a lot of great ideas. I hope that it helps. In general, I do believe that actually read the comment. There's actually a question here by Bitcoin. To me, we actually shared that Bitcoin can actually rally towards $35,000. We made the discussion that if the index basically goes up towards 335, the Nasdaq, then Bitcoin can actually rally towards 35,000. So far, Bitcoin today is about $30,000. So yeah, there could be some upside, but I think that the upside on Bitcoin is not really as substantial versus, example, the companies that we shared, which are gene and genetic editing names, or really the bombed out SPACs that I mentioned just a while ago. So also you can see that there's still a ton of I actually think that there's a ton of upside in Charles Schwab as long as you are more bullish in the longer term. So actually, this banking crisis has spurred some confusion on whether brokerage firms like Charles Schwab is actually gonna get affected. I doubt that to happen. There's of course a lot of continuation of ideas. I didn't expound, but to me actually, Nintendo's expansion towards movies and theme parks is evidence that there will be stronger set of buyers, newer generation of buyers, and with a 50% margin on Nintendo. And Nintendo's like trading at just $40 billion today. It's actually trading at 10 times PE multiple. I see a ton of upside actually on Nintendo and Alibaba. So for those value investors out there, actually, I do believe that maybe these ideas will happen over a year's time, but watch how these things play out. And then the genetic editing, I know that's a very to the moon type of targeting, but it's very hard to value how a cancer drug that's approved over the next coming years is going to be valued at. Would it be worth 100x or 10x? Possible, because biotech, the way it moves, I mean, the fact that it moved just 20% in a single day already tells me that there's ample room for upside rather than downside for genetic editing stocks, as well as those. And the fact that you're seeing that a lot of these IP, intellectual property names, with zero debt getting bought out in the market, I think that just tells you that maybe SPACs, even if they don't have revenues, may actually have bottomed out. So I'm not sure if it really is a bottom, but we will watch those companies. For instance, companies like Lilum, companies like Ouster, whether there's actually a real bottom happening there, just as much as what's happened in Heliogen recently, wherein some private equity is just willing to buy out all the shares at the market for cash. So with some of them actually trading below cash, their market cap is now trading below cash. I think that is quite an interesting proposition. So there, wanted to just discuss long ideas, and of course, I am bearish in the I'm bearish in the economy, but I do believe that there will be rampant inflation, such that commodities will be a very precious asset that will continue to be scarce. So look at lithium plays. Lithium, you've got 1772 in Hong Kong, Ganfeng Lithium. For those who are very bullish on copper, we actually discussed Freeport-McMoRan as well. Freeport-McMoRan, I did actually share it in January, just as much as I am a believer of copper and molybdenum and gold. So I'm really bullish on the electric vehicle future, but I know that it's not something that you can be bullish upon for like a few months or a few quarters. I do think that electric vehicles will happen, within about 5 to 10 years in a very mainstream way. So in that light, that means that there will be ample and sufficient demand that will continue to electrify our future. So that means that I'm actually watching also, not haven't bought, but I'm also watching on companies like ChargePoint, on whether is it a bottom at 8 or should I wait for it at $5 or $2 or $1. But those are also in my watch list. Yeah. So in general, I'm actually bullish on commodities. Not necessarily just the precious metals. Yes, silver, gold, yes, they'll go up. Yes, energy demand. But at the same time, I do believe that the industrial sector, i.e. copper, which is electrifying your future, copper, lithium, which is basically needed for that electrification of your future, is going to have sufficient demand. So there, that's why I'm bullish on a lot of commodities, metals, and miners. Thank you very much. Goodbye.